Hello guys, I thank you so much for stopping by to watch this video. So if you find it helpful, please endeavor to subscribe. You can share it and do anything good about it. So today we are going to be talking about how to pick high quality points of interest, uh, POIs. So in this, by the this is I'm remaining with one video. Then we start on BTMM content for those that always here. And I told you BTMM, I'm going to be sharing some of the things that I liked about BTMM. So stay tuned for those that would like to get an indicator based strategy. I'm not going to be teaching the whole strategy, but I'm going to be sharing some of the things that impressed me the most about BTMM because I realized many of you like using indicators. Just stick around. But in today's video, I'm explaining something that will also help you in BTMM. You get, that's why I chose to first do SMC, because yes, much as I also use BTMM sometimes, but majorly I like the liquidity part of SMC. So basically, points of interest, those are going to be reactive areas. For instance, let me go here on TradingView and then I illustrate something. So just suppose we are in an uptrend. You get, let's say the market is moving up like that. You get, and then all of a sudden we see that the market starts to shift down. You get, there is something, a common behavior, something like this that we're going to be finding. You get, so you see that here we're moving up. You get, we're in an uptrend. First hold up, let's say we are moving up, making those pullbacks. You get, we make those pullbacks. Now there's something I want you to realize. Now you see that the moment the market shifted, we got a shift in market structure. You get, as the moment we got a shift in market structure whereby we started breaking structures below, you find that the moment we reach, you get, we reach in this area, the previous pullback, the market tends either to break down and goes above, or just there and then to just it makes equal lows and then it jumps back. You get, so POIs, you get, we could be meaning this is one of the POIs. You get, it's a point of interest that we're seeing here, but not the only ones. You get, this is also a point of interest. You get, it's a point, these are points of interest, but then we also have points of interest that we are reacting to upwards. You get, so in a bearish market, then we could be looking at areas of supply. You get, so I'm not going to be touching that part. Maybe in the next video, you get, maybe in the next video I'll be talking about it. So points of interest are those points, you get, or it's that market behavior whereby, let's say, you know that I'm moving from this point, but at least in this area, just suppose, I'm supposing, if I told you entered in here, you get, this is the point of interest, POI for entry, but then this one acts as the POI for taking profit. You get, so as you get in, you have to know two things: where to get in and where to get out. You get, so that's it. So that, those are the POIs. So now I have this example that I really liked. So most of the time for me to pick them, I like going on a much bigger time frame. And sometimes you see this EURUSD, by the way, I'm on H1 currently, but it depends on the time frame where I'm clearly seeing the market. You get, sometimes there are those setups that where you go on H1, it has a good setup, and then there are those moments you go, let's say on the daily, it has a good setup, and sometimes you don't understand it. Just like for me, the daily wasn't really giving me something really clear that I could look at. So I realized on Friday that this was a very, very nice thing that happened on Friday. You get, and by the Fridays and Mondays, there are always major things that really happen. You get, what did we get on Friday? You get, we can see, I told you there's a reason as to why I gave you that those periods of consolidations. What you watch them. You get, now I told you in SMC those consolidations. I was doing those videos for a purpose. That's what we call liquidity. You get, basically I'm teaching SMC. Those are the concepts that we use. Liquidity, they build up liquidity. Oh, there are those zones where the market is in indecision. Let me first go back to our trading view. You get, now these are the things that we always see, is that there are those moments when the market seems to be balanced. You get, buyers and sellers are participating. We are in a balanced mode. You get, so these are moments of indecision. So the market creates buy side liquidity and sell side liquidity. So uh, many times, given that the market maker here, there are people who are lured into buying and selling. Sometimes they may choose to go out and then they proceed, or they may choose even to turn and they become bearish. You get, so there's a lot. I talk more about this liquidity concept in mentorship. You get, so these are the things that we always see. So now there is something they made on Friday. You get, whereby we can see that we had this little consolidation. You get, the market expanded upwards. You get, it expanded upwards and then we broke structure there. You get, up, but then all of a sudden we came and broke a structure below. You get, so now what came into my head, that now I think the guns have shifted. Now they're shooting downwards. You get, the bias changed. You get, the bias changed at that moment. So now, yes, this is Friday. If I told you, now if I'm going into Monday and then I'm making analysis of what to do. If for Friday you'd base on the previous days. Now on Monday we base on the sorry on the previous week. You get, so now we had gotten a shift in market structure. You get, so now I believe here I would be looking for confirmations, more confirmations to sell or to sell more. You get, but as you know, as I've illustrated here, even you can utilize, given that this is a big time frame. You get, this is a big time frame. We know that, let's say if we break a structure here, we make an impulse and break a structure, there's a possibility that the market comes back in. You get, so now that's what I want to explain, that point, because yes, we've broken a structure. You get, we know, yes, we are shooting down, but then is there an interest, a point of interest? So a point of interest could be an area of supply. You get, for this case. You get, now what is my take profit? It is here. Much as I know we are going down, we are proceeding down, at least here, this is what I would eye out for. You get, that's what person I would look out for. You get, so there's a point of interest up here and there's a point of interest down here. So these ones become our points of interest. So now let me tell you straight up, in these zones, you get, in these zones, we are not trading. We're not taking entries here. You get, we're not taking entries here. What are we doing? We are studying more. Don't take entries at extreme points. You get, so now let me go back. Now we are going into order flow. You get, now this is H1. What do? I go on M15 for Monday. You get, M15. Now what does, remember we broke structure here. Now one of the interesting things is here. You get, what would I be looking out for? You see here where we came from. You get, yes, we have this fair value gap. I've taught almost everything. You get, a fair value gap, this gap that you're seeing. Now, I think I'll also share this same content to my students, and I think I'd not emphasize the point of fair value gaps. So you see, during expansion, as prices expand, you get, we leave this gap. So if you count 3 candles, actually, the fair value gap is here. You get, if you count 3 candles, 1, 2, no, yeah, 1, 2, 3, you get, you can see that there is this gap here that you're seeing. You get, it is not evaluated. You get, so it is one of the things that would be targeting. You get, but there is something really funny. Sometimes they know that we are a lot of people who are waiting for this area. You get, to be reacted to. You get, the area to be reacted to. So that's why sometimes I consider the trading sessions like what has happened during Asia, and then you see what happens in London. So there are a lot of people who are also drawing this area as an area of, let's say, resistance. See, because we've broken down, so they may want to sidestep you. You get, but now, but overall, much as we know, so that's why counter trending here, going back into the zone, could be kind of tricky. But now, here is what I'll do. You get, yes, you're watching this. Then what do we wait out for? Because we are waiting for selling confirmations, we have to be patient. You get, we have to be patient, and then we can see that we broke structure above. And what is interesting is we came here. You get, so I think I talked about discount premium. Now these are the things that I was giving on this very channel. Discount premium, I explained those things. Now I measure up something. I had made a mistake actually. I had made a mistake. Let me first. I was measuring it the wrong way. So we started from up there. Oh no. Let me delete that Fibonacci. Let me use this. So we started up there and then we came here. You get? We came there. You get? Now we look out for the equilibrium. You get? The equilibrium is here. It's really unfortunate that they didn't even buy above premium, but let's leave that. What we are considering the most now is we can see, yes, we're expecting the market to come back in the zone, and then we broke structure here. You get? Now when we break structure, I'm not going to go into the details. The same thing happens, but here on a micro scale. You get? We started on H1, but now on M15. Now the same thing, we break below, we make a pullback. Now on this here, we'll be looking for selling confirmations. Now we sell, targeting what? This is our first target. You get? Our first target. At least there we are pretty sure. Now in this video, I really wanted to show you, some of you really don't know how to pick points where take profit. You get? So that's a very, very good point for you to take profit. You get? Now after taking out this, you can see that we got a shift in market structure still. You get? We got a shift in market structure. We break above, we consolidate, and then there's something that I illustrated when we're talking about that time when we're talking about consolidations. I told you that's why I would recommend that you watch those videos. I told you that if at all we are breaking structures like that, you get, we expect the market to come back into that zone, but then we consolidate. You get? We consolidate. It is one of the reasons that the market is not interested in coming back far up this side. You get? Let me first. You get? It is one of the reasons. It is one of the signs that we are not interested in coming far up this side. You get? And it is something that really happened here. You get? We broke structure. Yes, would have expected the market possibly to come back, to make a pullback, but then instead they made a range. That's why we expected it to be going up. Like here, my bias personally, if you backtest this, then it would be shifting guns that go up. Here you just get your entries. Now this is M15. M15, you can see I think here it was end of Asia. Yes, Asia was closing, then you target up. You get? Then just shot us up. You get? So in this consolidation for you, just take entries. Personally, that's what I eye out for. So let me first. So now the next thing that then where would be our take profit? Now these are the reactive areas. You get? You see this previous high. And by the way, these are points where we are going to be watching. Are they really working on? Are they shifting or what? You get? Now we reach here. You get? Now we are on M15. Let's go to M5. M5 or even M2. You get? M2. What is M2 giving us? You get? M2 is giving us, you can see these guys shifted. You get? They are breaking structures to the downward side. You get? To the downward side. You see? So what are they targeting? We are targeting, this was a good demand zone. You get? So for me in this area here, I target to take my profit. Actually, we are reaching it. Then I start watching. You get? Then you start watching. So basically, that's what I wanted to share. That's how we pick points of interest. Personally, okay, that's how I pick points of interest. I start on a time frame, a much bigger time frame, where I can understand properly what's really going on. you get what's going on, and then I start dropping on small time frames to look for those opportunities. You get to utilize them. So that's it for now. I thank you so much for watching, and keep sharing. You like the video in case it's helpful, and stick around for the BTMM content that I hope to bring to you guys. Peace.